All right. Daren, we are looking at the hottest meme stock. This is a meme stock, right? This is like a GameStop, right? That I'm like, this chart is a GameStop or the.
Well, so that's funny because 2 weeks ago on our other podcast, I pulled this chart up and I clipped off the gold part of it. And I said, hey, Chris, who's our more conservative investor in the group. And I said, Chris, what meme stock is this? And he was like,
this is a tech stock that I'm looking at.
Oh,
right?
this is
the newest AI.
No, this is gold, Dan.
Quantum
this is
compute.
gold.
No, this has got to be a crypto. This is a crypto?
This is gold, Dan.
This is a coin?
This is gold.
This is a coin.
It's not fart coin,
a hard
Dan.
coin?
It's not
a
fart
real
coin.
coin.
This is real coin.
This is gold coin.
This is gold coin.
Financial confidence for your hip pocket.
Money is really just energy.
Thanks for checking out It's All Money. Welcome to It's All Money. My name is Dano. Weir. I'm the marketing director for Sonoma Wealth Advisors. We are in the Sonoma Wealth Advisors conference room in the city of Sonoma, just off the square, and we are talking about gold. My co-host is Daren Blonski. He is the CEO and managing principal of Sonoma Wealth Advisors, and we're very excited to have our guest today. He is the owner of Napa Gold and Silver, Jason Bowman. Welcome to the show.
Thank you.
The price of gold, guys, just this year alone, is up 52% per ounce.
You know, and I actually just saw in the last 5 years that gold, the price of gold, has surpassed the performance of the NASDAQ. That's shocking.
I have later in the data, depending, you can slice these things a million ways. I have gold outperforming AI chip makers in some cases.
What is going on?
So we thought, hey, this is like the most underreported asset right now. Like, and there's no machine behind it that's cranking all the news media about it. So let's sit down with Jason. Let's sit down with Daren. Let's talk about gold. So you both approach golds in different ways. So depending on how you hold it, depending on how you're buying or selling it. Jason, let's start with you. Tell me about your business, which is Napa Gold and Silver.
There's a lot of different parts of my business. I help people liquidate their, heirlooms, their items, their, old jewelry, things like that. And then I also help people invest in physical coins and bars and rare coins as well.
So I can have, the classic case, it's an estate sale and you've got the box of jewelry and what do I do with this? And there's some gems and it's been crafted into different ways. People in Sonoma, Napa, Marin County, they can come to you on Jefferson Street at your shop and you can turn that into a bar of gold.
Well, I can turn it into cash or I could trade them for a bar of gold if they wanted.
Wow,
sure.
That's incredible. That's cool. How do you end up in that business, Jason? There's got to be a story behind that.
I mean, when I was a kid, I used to go gold mining with my dad. He used to take me in the summertime up near Sacramento, and I kind of had an appreciation for gold just because we'd work our butt off to try to find just the tiniest little bit. And I remember as like a 10-year-old kid wondering, why is this only $300 for an ounce when we spent way more than that trying to get a fraction of an ounce? So growing up, I always just kind of had an appreciation for what gold was. So I think I saw it a little differently than a lot of kids growing up. So, and here I am, fast forward, 40 years later, still doing it. So
as you said, this was $300 an ounce when you were a kid. As we record this today, Daren, it's past $4,000 an ounce.
Pretty crazy. I just, the way this gold's going up right now is very curious. And wow, could we dive into the macroeconomics and what this could mean and what it might mean? None of us know. And that's what we're here to talk about.
So in your business, Jason, so you've been doing this for how long?
Well, I've had my own store for a little over 15 years now.
Okay. Just getting started.
Yeah.
It's a joke, Jason.
Yeah.
How have you seen the price appreciation change your business? So the price of gold, the rise, especially recently, has anything changed or is it still?
Well, there's a lot of new
old?
customers coming in, people that, maybe they see the price rising and they just want to know more about it. So I have my regulars that I've known forever, that they've always been coming in. And then recently there's a lot of new people whether they want to cash in, old jewelry or something, or they want to, get in on the price rise and buy coins and bars.
It's interesting because just as you're describing, it's like when it hits a certain level, here comes this new wave of people. Daren, you see that all the time. We saw that last summer with NVIDIA. Like all of a sudden, people who would never, ever speak to you about a stock are like, hey, you can see at certain price thresholds, you can just kind of see suddenly it's the topic at the barbecue.
I wonder, but that's the interesting thing about gold is I feel like people at the barbecue won't talk about gold at the barbecue. Like I hear it all the time, like, oh, let's talk about NVIDIA. I guess it depends which barbecues you go to, but I always use my gauge for my bubble gauge, I call it, for what are like the 20 somethings that just got into the market to what do they come talk to me about when I go to Thanksgiving dinner or Christmas dinner or one of those. And they're like, oh, have you seen this? And then I know we're in a bubble. So I wonder if this year they're going to come up and be like, man, have you seen my gold coin? I just don't think it's going to happen, but we'll see. And I think that's what makes it unique about an asset class. It's like this under the current kind of thing. And there's this whole community of people who appreciate gold, whether it's extracting out of the ground, whether it's trading it for value, whether it's collecting it for hobbyists. There's a very large community out there that I think is not appreciated perhaps by the general public, more so with the people in that environment. I think that's what makes it unique about as an asset class, because I mean, how many other asset classes do you have that there's a hobbyist culture and an investor culture all in one? And I guess maybe cars, like really nice cars, like Porsches. I learned the other day, Porsches are kind of like that, but
right. Jason, can you describe that, your customers? I mean, what can you describe the gold community? I mean, is this someone who's, is it really diverse? Is it like the same type of person over and over who, for people who want and hold physical gold or cash in gold, what kind of people? Hard to describe.
There's a lot of different types. I think in general, people, the world that we're in now is kind of a fake world. I think a lot of deep in our DNA, in our soul, we kind of know. It just seems like there's a lot of fakeness out there. Like, look at our debt. It's just astronomical. You could never pay this stuff back. And there's just more digits added all the time. And I think people, want something that's real. And I think for thousands of years, that's been gold. And when somebody holds a 1 ounce gold coin or bar or something in their hands, maybe for the first time, you can kind of tell it's special. And there's just something about it. I was telling you, I started doing this, when I was really little. I was like 10 years old with my dad. We would go gold mining. And when I found my first nugget, it was the first week we went gold mining. It was the most boring thing I'd ever done in my life.
Dad.
Yeah.
Why am I doing this?
Yeah. And then I found my first gold nugget and I got gold fever.
How big was it?
Probably like half a gram.
Okay.
Like a tiny little thing.
Man, a half gram gold nugget is.
It was like, I found this in a creek that's just out there and anybody can find this, and I'm going like, what the heck? So anyway, there's something inside of us. I think that gold is a special thing, silver too, but especially gold. I think it's in our DNA. They call it God's money. It's like, there's something about it that it's stood the test of time for thousands of years.
It's like gold fever's a real thing.
Oh yeah. It's definitely real. But yeah, I think when people discover that for the first time, I mean, what is money? It's hard to say. I mean, I didn't learn what money was in school. I mean, is $1 really money? It's currency.
So let's talk about that. What makes that valuable?
Well, let's hit some important dates here, because you're talking about the history. I didn't know if we'd use this or not, but I'll hit this. Okay, so the history of gold probably goes back further than can be recorded, but I've got about 7 dates here. 1500 BCE. This is before zero, so we're going negative years here. Gold becomes recognized as a standard medium of exchange for Egypt. 1284, England issues its AD. England issues its first major gold coin. 1787, the first U.S. gold coin is struck. 1900, the gold standard, which is every dollar has a corresponding piece of gold backing it. The gold standard becomes official in 1900. In 1913, they then reduced that to 40%. So they went from 100% backing of gold to 40%.
So why they have to do that? Let's stop there for a sec, because I think that's an important point. So initially, the dollar was all backed by gold, meaning they couldn't print dollars unless there was gold to correspond to it. Then they reduced that to 40%, right? So what year was that?
In 1913, World War I.
Why? Why do you have to do that? Well, because you can't print more money if you can't get off the gold standard. And then you go to the next important date, which is
1933. They've got the banking panic, and Roosevelt actually prohibits private holdings of gold. Okay, then 71, Nixon gets the United States completely off the gold standard. And then in 74, Gerald Ford actually signs an executive order that allows, again, to privately hold gold. So those are some just kind of important dates in gold history, and I've got footnotes for all that if you want to check it in the show notes.
So I want to dial into that 1971 date because it's so important to see what's happening right now. This is a U.S. debt clock, right? So you can see we're at 37 trillion. We are at 19 trillion when COVID hit. We're not backed to the gold standard anymore.
Yeah.
And you can't do that if you're any politician that wants to survive through the next election. In 1971, when Nixon pulls us off the gold standard, he effectively opens the floodgates to print, baby, print. And thus, now we're at $37 trillion in debt. So you go back and you can surmise, well, why is gold going up? Because there's a general acceptance now that two things. One, that the government can't stop printing. And this is a little thing, I think we might have talked about this in our last podcast. When Putin invaded Ukraine, right? What happened when Putin invaded Ukraine? What was the threat that was so important to changing this game?
So it's 2022, and Putin invades Ukraine, and the United States freezes $300 billion. I want to credit Mike Philbrick, who was on our podcast On the Markets. He tipped us off to this, and this is, everything with a grain of salt, but he threw out this idea that the United States freezing Russian assets in 2022 as a result of the war, just let the rest of the world know, like, hey, the dollar can be frozen at any time. And so he suggested that might have been a result of the huge spike in gold.
So they freeze the dollar, the Russian dollars, right? And at the time, I remember it happening. I was talking to some other macro brains out there, and we're like, whoa, this is big. And I don't think people realize how big. The fact that what we signaled and the Biden administration signaled to the rest of the world was that if you don't play our game, we're going to take your money. And guess what? We control these things. So it became a stick they use. The strategic mistake of that is then they push the rest of the world into the BRIC system. Trump comes in, says, no BRICS, you play BRICS, I'm going to shove tariffs on you all over the place. We've still got those Russian dollars frozen, and we're threatening to give them to Ukraine to then fight off the Russians. So now you have an environment where you have all these governments.
I have to stop you and just say, not political statements. This is not saying necessarily right or wrong, but
correct.
Crazy enough, when you start really looking at all these aspects, when you see a huge spike like that, you have to start looking at why. And these are some of the reasons, perhaps why.
We don't know why, right? No one.
Right or
what
wrong.
we find with the markets is the markets do what the markets do, and then we all construct meaning and narrative for why it did what it did. So let's be clear about that. So one possible scenario is that now governments are realizing we need to convert this into gold.
Because they might take it if
we don't play the game.
We tick them off in some way.
That's right. And we're seeing that in Jason, in your world. If you imagine all of us individuals as our own, government or nations coming to individuals like Jason saying, hey, I've got to convert some of this to some of this. This is a John Muir coin. It's not gold, but
that's an interesting point, Daren. So Jason, in your store, we got way at a global tangent there, but it actually ends up impacting,
we
what
should
you
just
do
call
in
this show
day-to-day.
Money Tangents.
Yeah, I know.
We just go off on tangents the whole time.
But it ends up flowing downstream to what comes across your desk. So Are you finding people bringing in gold to turn into dollars, or are you finding more people bringing in dollars to turn into gold?
Well, the last month or two, there's been a lot more buyers that have come in. A I was saying before.
Define buyers. So if
So-
I'm a buyer, I'm bringing you this for that,
Yeah.
right?
Mhm.
Assuming that's a gold coin, which is not.
You're buying metal from me.
Yeah.
Now, about a year ago, there was very few buyers. There was a lot of sellers for whatever reason. Now it's evened out a lot. So I have both now.
So this is interesting, right? So you say a year ago. So if we look at the charts, and let's look at the weekly chart. And so we're looking at, so this is right now we're in almost 26. And so we'll say a year ago. So that's give or take, that's 25. So we're right about there. That was a year ago. That's what's happened to the gold chart.
Yeah, pretty much straight up.
Yeah.
Crazy.
Yeah.
Yeah. It's crazy times.
We were talking before this show, and I saw that I introduced Dan and Jason to a new term called grokked. I grokked a post on X. I still hate that name, but Twitter, X, whatever. And this person said, every other time in history when gold has done this in price action, it has been the end of that fiat currency, which is the dollar. And so I grokked it, and I said, Grok, is this true? And Grok says, yeah, it's kind of true. So is this time different, Jason?
I wish I knew. I don't know. It's above my pay grade.
Yeah. Mine
I'm
too.
just a little
And
guy in
Dan's.
Napa.
We don't know.
Yeah, and I think it's important again at this point. We are a diversified. In general, we look at a diversified approach to investing. So sometimes Daren gets excited about de-dollarization arguments.
I mean, don't get me off on Bitcoin. So that's just
so. I think what we're really trying to do with the episode today is we're trying to say, hey, like it or not, this is happening. This is a part of people's portfolios, and why, and how is it happening both in the physical space and also in the digital space, Daren. I think that's maybe what some people don't realize is you can actually buy gold from both of these people. So, Daren, how technically...
I don't sell gold.
But you can... What about a gold ETF?
Well, that's true. So
that's what I mean.
Let's bounce that back to Jason. So, Jason, you've got gold ETFs, which is our expertise, right? And our clients generally have a position in gold in all of our portfolios.
What is a gold ETF, Daren?
It's basically more or less an index that tracks the price of gold. There are some gold ETFs that you can actually buy shares of that ETF and take physical delivery of that gold. Which I don't recommend usually, but if you're going to track the price of gold, then you can buy a low-cost index like IAU, which is one of the ETFs, which I'm not advising you do, but that is one of the options out there. So you're just tracking the price versus owning the physicality of it.
Okay.
Jason deals in the physicality world. So contrast that for me. Like, why would I want to own a gold coin versus the ETF?
Well, I would say I would never want to own an ETF because I don't really own the gold. That's what I would say.
Fair.
I mean, and there's a place for everything. I mean, I own Bitcoin ETF, which
Right.
people say the same thing to me because that's just easier to buy, right? It's easier to trade it. But one of the reasons people buy gold, one of the big reasons is that you don't have any third party risk. I mean, you own a piece of gold. It's in your pocket. It's in your hand. You look at it. You don't have to worry about somebody else delivering it to you if you want it. Or if the world, gets even worse, you don't have to worry about getting delivery or being able to find somebody to, for anything. You own it. So that's the whole beauty of it. You work your butt off your whole life for your money or what you think is your money. And it's digits on a computer screen or it's, whatever it is. But when you own gold and silver, you hold it in your hand. You get to look at it and hold it. So, that is the appeal. I mean, to me, it's like, yes, you pay a little bit more in a premium because there's a cost involved.
Explain premium for the
So let's
viewers.
just say you have a gold price of $4,000 for an ounce of gold. That's generally what a refinery and a miner would trade at. Then once it's all refined to be pure, it needs to be poured or made into a coin or a bar or whatever. And that would be the premium. So there's a cost involved. So let's just say, if gold is $4,000, you may be able to buy a 1 ounce American Eagle coin right now for roughly 3% over that. So by the time the U.S. Mint takes the gold and makes it into a coin and ships it to a dealer and then gets it into your hands, it's roughly 3% right now. That can change. Sometimes it's 1%. Sometimes it's 10%.
So do you find that 3 is kind of middle of the road for premium?
It's pretty normal. I mean, for like an American Eagle coin. Now I have other things that I like right now that I'm selling for the spot price of gold. Because
it's just more junk, kind of less.
They look nice, but they may be something that in this area, like for instance, like 100 Corona coin from Austria. They've been making these since 1915. I sell those for the spot price of gold because, people come in asking for an American Eagle coin or a bar or something. They don't think to ask for a coin like that. Like that particular coin has just a little bit under an ounce of gold in it, and they don't know to ask for it. So therefore, when I get them in order to entice them to buy it, I'll give it to them for the spot price of gold. And for a lot of people, they just want the cheapest price they can get. So
when you say the spot price of gold, that's what the price per ounce is right now.
Yeah,
right. It's exactly set by the market.
Yeah.
So let me ask. I'm going to ask you like 3 or 4 questions around that because I think there's some really important points here when it comes. So premium, right? So premium is the carry cost of what it more or less takes to transact that piece, right? So if I go in and I buy gold from you, and then I turn around next month and hey, I got to sell this, I got to make my mortgage or whatnot, then do you buy at a discount or at a premium?
It depends. Let's back up a little bit. Pre-COVID, generally, let's just say if on a 1 ounce gold bar, I might have been paying the spot price of gold minus $20 when you would sell it to me. And I'd probably be selling it for the spot price plus $20. So that $40, that's my spread. Now, after COVID happened, there was a lot of demand and very few people sold anything. And so spot prices were much lower, but premiums were much higher. Like we had, 1 ounce silver eagles were trading for, I think spot price was around $20. They were trading for like $15 over that. So almost double the silver price, which was crazy. But, I was paying like $12 over and selling for $15 over, something like that. And that was really out of whack. Now, as time went on, and that's because the mint shut down and there was a lot of demand and there wasn't any supply. So the spot price didn't even matter. I mean, it was crazy what was happening. Now it's just, like I said, for the last year or two, has been a lot of selling. So there's a lot of secondary market product coming back into the store. I didn't
define secondary market product.
That's when product comes back to me from the public and I don't order it from, say, a mint or a wholesaler. So if there's a lot of that coming in, I only have so much money to spend. So if I have a lot of inventory and I'm running out of cash, then I'm going to lower my premiums to get it sold to the public.
Yeah.
Or I have to move it on to a wholesaler or a refiner or something like that, in which case I'll probably get less for it. So for me, it's better for me to lower my premium and sell it cheaper to the public and entice them to buy it. So, so right now things are more normal. There are some things that I'm selling for the spot price of the metal. Some things are just a little bit over that. But generally the premiums are pretty cheap right now. But spot prices are much higher. So
it sounds like the because spot's going up, it's compressing premium now. And then
it's about the demand for physical coins and bars. Right. The demand is starting to come back now. So premiums are starting to come back a little bit. There was a while there I was selling a lot of silver product for under the spot price because if a wholesaler is going to offer me, say, spot minus $1, if I can get spot minus 50 cents from the public, I'd rather do that, but now I've noticed just in the last like week or so that at the wholesale level, the premiums are being raised, which means to me, they either anticipate higher prices or their inventory levels are getting lower. So they're raising their bid to get more inventory in. So Yeah. So during COVID, you paid this high premium. Now if you came to sell it, you're going to get you're not going to get that full premium back, but the spot prices are so high and most people don't care.
Mm-hmm.
It's just so much more money. Now that being said, if you're buying something today, say American Eagle gold coin for 3% over spot price, it could be 2 years from now that I might be paying 5% over spot price and selling them for 8% over, something like that. So just because you pay a little bit over the gold price doesn't necessarily mean you're going to lose that money, because the market might be different later on for the physical coin or bar that you bought.
So what's that?
Mercury dime?
Yeah, tell us what a Mercury dime is and why people use them or not use them. Or
Well,
Daren brought in his coin collection.
So yeah,
I grabbed a handful.
I was supposed to bring mine and I forgot.
This kind of goes back to what you guys were talking about. I mean, back in the day, a dollar, according to the Constitution, was supposed to be so many grains of silver. That's what a definition of a dollar is supposed to be. And then over time, people are people, humans are humans, and we tend to fudge with things like that. And now we have it's not backed by anything. So our coins, our quarters, dimes, and half dollars, all the way up until 1964, used to be made of 90% silver, which is what this coin is here. Mercury dimes they made from 1916 to 1946. And so this is kind of a piece of history. I mean, it's not rare. I mean, in my world, it's not rare.
Mercury in that?
They call it a Mercury dime, I think, just because of the design,
the face of that.
The coin itself is 90% silver. So they made
say,
yeah,
actually is Mercury.
No, that's just a name that we call it.
Yeah,
so,
I gotcha.
But anyway, yeah, it's cool. You can tell right away that it's an old design coin. So you immediately, for me, I know it's 90% silver.
Yeah.
So this is kind of a cool thing to have.
So there's something called constitutional silver, right?
Yeah, they would call that.
So define constitutional silver for us and why people collect constitutional silver or use it.
Okay, so our quarters, dimes, and half dollars, all the way up until 1964, were 90% silver. Over time, when you mentioned the gold standard, 1971.
Mm-hmm.
Well, according to Nixon, that was supposed to be temporary.
Right.
If you look at the video when he's announcing this to the world, he's basically saying we're just going to temporarily, not convert gold into dollar to gold,
which was BS. But yeah,
of course, But anyway, constitutional. It used to be called junk silver because they would put these coins in bags, $1,000 face value bags, and they call it junk silver because collectors didn't really want it. It was too common for a collector, and maybe it might be a worn coin or something like that. So they say, oh, it's just junk. And people back in the 70s, 80s, 90s, just bought it as for silver weight. Then this product actually got really popular, and they like that it's fractional, that, the U.S. Mint actually made these coins and the premium was literally nothing. So they started calling it constitutional silver because according to the Constitution, this is what our money is supposed to be. The old school customers of mine still call it junk silver.
Yeah.
So call it what you want.
We in our business, we have junk bonds and high yield bonds. So when financial advisors are trying to sell junk bonds, they call them high yield.
Yeah.
Same thing.
Yeah. At the end of the day, it's 90% silver. It's good silver, Yeah.
But, so that's an interesting kind of one philosophical approach out there is like, if I think there's a lot of different reasons people buy gold and buy silver. One of the reasons would be like, hey, this is, if you look at the dollar this year, it's been absolutely plummeting in value. And that's part of the reason that gold's going up is because
you have any way you can show that dollar value? You have a chart for that?
Well, we can show kind of on the DXY chart. You can see the DXY chart effectively shows you a juxtapositioning of all the other fiat currencies to the dollar. So like 10% down this year is DXY is the dollar. So as the value of dollar goes down, in theory, well, of course, gold's going up because gold's going up, but also the dollar's going down. So it's becoming worth even more comparatively. So that's partially what's going on. And that means that there's less demand for the dollar, which is arguable. But At least that's what seems to be playing out in the charts at the moment. So we go back to this and I say, okay, if I've got a bunch of these in the bank account, and if these are going to be worth less because the value of it's going down, U.S. is not as interested in enforcing these globally as the reserve currency of the world, then maybe I want to have in my safe some constitutional silver or junk silver, because it in the event of the dollar collapsing or total de-dollarization world, we could go buy and sell bread and whatever with these smaller increments of silver, right? So that's one of the reasons that people are collecting these type of things, because it's obviously, you can see on these, the face of this is really worn out. So to that end, Jason, if someone says, hey, I want to have some gold and silver, there's a lot of debate about how you should own that, right? The commercial at 12 o'clock at night that says buy silver in our fort warehouse, blah, 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 and we'll hold it for you. Why is that a good or bad idea?
Well, how do I even get into this? Buying gold and silver, I believe, is a great thing. And I just say this a lot to people. If people come into my store and they don't know, and they just are honest and they say, hey, I don't know what I'm doing, I will bend over backwards for that kind of person, because that was me. That was my own family. I would say, hey, if you were my mother, this is what I would tell you to do.
What would you tell your mother to do? That's a great.
Well, if she came if she wanted to buy gold and silver, I would put it.
We have lots of moms on this show.
Yeah,
so
of course.
Mom, listen up.
Okay, so some of these people don't realize, like, the margins on this they're not a lot, and it's very volatile. So it's really hard for a dealer to make a living buying and selling precious, bullion products only, because, you might have a collectible that might have like a 20 or 30%
Define bullion,
margin.
define collectible.
Like, let's just say you have a collectible coin that, has a silver value of $40. I had a silver dollar recently that came in. A lady had a group of silver dollars, like 150 silver dollars. Most of the time they're common, and they're going to trade very close to the silver value. She had one in there that was an 1889 Carson City that we sent off to have graded. I pulled it out. I paid her $8,500 for one coin, and then once it was certified and graded, it sold for about $10,000. So, something like that, that's a really nice margin, and you wish that you could, that's only happened to me twice in 20 years, where I pulled out a really expensive coin
with a collectible value of it.
Yeah, when this customer had no
was.
clue. They just had a few coins that they brought in, and
I tried to do that to Jason today, and he busted my bubble, though.
What is it? Well, wait.
What is this?
Wait. You're cutting him. We got to let him finish.
No, this is his exact moment, right? I bring this coin to Jason and say, I think this coin is worth something.
Yeah, well, this is how it normally goes.
Conversation.
It's like, sorry, but this one isn't real.
What is that?
They call it a pillar dollar, but it's not a real coin. Some of this was like made after the fact, that it's like a copy of it,
right,
but it's not real. So,
but how did you tell that right away? Like, he didn't barely.
Well, I've seen that coin a lot. So
okay,
it's like they, you learn counterfeits by studying the real thing.
Yeah.
Right. So if you've dealt with the real thing every day for the last 15 years, then it's easy to, some counterfeits are better than others, but that's just not a good one.
I'm going to buy a real one of these from you, Jason. Okay. So if you got one to sell me, I'm buying it.
I'm sure I do.
Just for the story is so good. And because this is kind of what we do in our business in financial services, because people walk in here with a portfolio and we're like, right? Here's why. And they're like, what do you mean? I thought I was going to retire.
This is my annuity. It's got a cash value.
Right? Yeah. So same kind of deal. So mom walks in. So like this lady walks in with silver dollars and you're like, we grade these things.
I hate to even tell this story because it's so rare. Most of the time it's not like that at all. But I'm just saying there's more margin in something collectible like that might take a while to sell it. But when you do sell it, you make a little more money on it. Now, bullion, I have things all the time where it's like I do these large deals, silver deals at, my margin's like 50 cents. I'll buy it and then resell it and make 50 cents an ounce. It's hard to make a living like that, when you have overhead and everything else. So, what happens is sometimes these companies that are trying to make more money, it's a good thing for you to buy gold, but they sell you a gold product that either it has $4,000 worth of gold in it, but they're going to sell it to you for $12,000, something like that, like triple the gold price or way more. The same product you could buy from me for way less. But if they get a good salesperson on the line, they're kind of, their margins are massive.
And they got to pay for that TV
Yes,
commercial in the first place.
Yes, they have the salesperson, the commercial, all that. As opposed to me, it's like just me in my little store that, I keep my overhead low and I try to make a little bit of money off of each deal, but I don't need to hit a grand slam on every deal that walks in. So, unfortunately, I have dealt with that a lot where somebody has kind of been duped into that when they come into me and I'm like, hey, this coin has, 0.2354 ounces of gold in it, like a British sovereign. And they use coins like that. Sometimes that kind of confuse you. You have to do some math to figure out how much gold is in the coin. People don't really know how collectible it is versus how common. And they end up paying these massive premiums. I'm not talking 2, 3, 5%. I'm talking like 300% on an item that they should have been paying 8%. And then gold has to literally double or triple just for them to break even. That I've seen that many times, and people are spending hundreds of thousands of dollars sometimes, and to find out, oh, gold's tripled and I barely got my money back. That's not cool.
Yeah,
so
that would be the equivalent of broker charging a huge upfront fee, would it not?
Or buy this annuity. You can have lifetime income with this annuity, but you don't realize there's all these fees built in. So the reality of making your money back is pretty slim.
Yeah.
That's why I always say buying an annuity is great for the guy who's selling it. That's about it.
Jason, so when we get back to this for a second, because I felt like you said the advice that you would give your mom if she came in. So it would be what? Because we got on a sidetrack.
Let's just say somebody had $20,000 to spend or something. They want to buy some silver or some gold. I would say something that you can buy a nice product that's going to be easy to resell later.
Tell me about easy to resell. Like, how do you define that? Because that's a really important point, I think.
Okay, so this happens a lot. Some people, if somebody's new and they've never bought gold, let's just say, they come in, they're talking to me. Usually the first thing out of their mouth is, what are you charging for gold? And it's like, well, and I say, okay, do you want a Pinto or do you want a Lamborghini? It's not all gold is exactly the same. You have two, like say the Royal Canadian Mint in Canada, they make what's called a gold maple leaf. And a lot of people have seen those. Mm-hmm. You have one that's fresh out of the tube. It's a nice mint fresh coin. It's an ounce of gold. And you have another one that's beat up and scratched and, it's been dropped on the ground. Since it's pure gold, it's soft and they tend to bend and scratch and ding really easy. One, they're both, let's call it $4,000 worth of gold, but the one's going to be really easy to sell because it's pretty, it's nice. When people are going to spend $4,000, they want it to look nice. The other one, I may have a really hard time selling this one because most people spending that kind of money, they don't want to spend it on junk or something that looks like junk. But when you have spikes in the market like this, and there's all these new customers coming in, I only have so much money to work with. And if, sometimes, it's been crazy where, I'm spending all this money in 2 hours and going like, what just happened? I had all this money this morning and it's gone.
You ever
so
just
you gotta move it.
Pause? Like, I got to pause. Like, something's going on today. I'm just not doing transactions right now. Or do you just run like your hand?
I don't know. I try to never do that.
Yeah.
I'm always moving.
But you're talking about people just coming in the door, just gold.
Not every day is like that, but it's kind of an extreme right now just because these prices have spiked. So there's all these new people coming in and, so I just do the best I can with it. And I'm as fair as I can possibly be. But I always have to remember too, like, hey, if I have too much inventory of this particular product and somebody's selling me, $200,000 of this that I don't need, I know that this is going to have to be shipped off to a wholesaler. And I know the turnaround time right now is probably 3 weeks to like, by the time I'm taking the risk of actually getting it there. And then once it's there, they have to process it and get me paid. And right now they're so backed up, it's like 3-week turnaround. So I have to factor that into what I can offer because, there's not enough demand right this second. Usually what happens to me is I'll wholesale it out and then like 5 minutes later, somebody else will come in and want to buy it. And, so I do my best to wait as long as I possibly can until I have to do that. But it's like a last resort for a small dealer like me. But,
gold's been pretty stable as a price until recently. And that makes your job even harder because you don't know what's going to happen the next minute to the gold price.
I don't, but it helps because I'm kind of like a lifelong gold bug and silver bug. So, and there is a little bit of a gambler in me. So, so it kind of, I'm okay with it. Like, I'm happy to keep buying it. I look at it and go like, my money has to be somewhere, and I would rather have it in gold and silver than anything else anyway. So I know that I could lose. I mean, I was in business in 2011 when we had a big run up in prices and then a big deflation in prices. So a lot of people don't know this, but like gold lost half its value from 2011 to 2016, 2015. It lost almost 50%. So
I'm so glad you brought that up. When you're in that moment, you're a gold bug in that moment. It's the exact opposite of this moment.
Exactly.
What types of things are you thinking? Because we always talk about investing as a 3, 5, 10-year proposition of really looking at that time frame. People have a hard time with that. You're a year into gold on a slide in 2012. What types of things are you thinking as an investor at that point?
Well, as a business owner, it's tough because I remember in 2000, I have a lot more experience now. I've been through it. So at the time, I remember, buying, let's just say I bought a gold coin for $1,900, and then the next day gold went down $70, and I just paid $1,900. And then the customer comes in, and let's just say my premium was $50. So let's just say, gold was, 1830, and my premium is $50. So I'm selling it for $1,880 the next day, and I just paid $1,900 the day before. And then of course that customer's like, well, no, you can do a little better than that,
Mm-hmm.
Yeah.
So, and I understand.
I
totally, and I understand. I mean, I'm that way too. I want to get the best deal I can, but it's tough for a dealer because it's like, man, I'm literally losing $20. And now he wants another $10. And it's like, and sometimes, and I've had to learn, because it's in my nature because I buy and sell a lot. So it's in my nature to always there's a balance between, you want to be fair with the customer, you want to be fair to yourself, and kind of figure out, where that middle ground is. Now I've learned that it was a great life experience living through that period, because I sold so many things at a loss, and I had to get used to it, and you just have to keep it moving. You just have to know that, hey, I'm going to sell this one. I'm losing money on this, but the next person that comes in the door will sell it to me at the new price, and I'll be able to keep going and not get caught up in, well, I'm not selling it today because it's too low and I paid too much. It's like, that's just very short-sighted. And I've learned, I'm not perfect with it all the time, but I'm definitely better with it now of like, hey, this is, it just is what it is. And try to put myself in other people's position. And, like the other day, somebody came in and they said, well, what are you charging for this product? And I told them, and they said, well, when gold goes down $100, are you still going to be charging the same price over spot price?
Yeah.
I'm like, I can't. And I kind of have to laugh because I'm like, I don't know. I literally, I have to, every morning I get sheets from wholesalers all across the country that
they all just email to you.
I get emailed sheets every morning on different products, what the bid and ask spread is at the wholesale level. And
explain the bid and ask spread. We get it because we're in this business.
Bid and ask.
Bid and ask spread.
Mm-hmm. Well, I mean, it's just something, let's just say a 1 ounce American Eagle coin. Let's just say.
Which is a very common coin.
Yes. American Eagle gold coin. Let's just say their bid is for one particular wholesaler. Let's just say they're paying me the spot price of gold.
So what they're willing to pay you.
They're going to do business with me and pay me, say, spot plus 25. It's called spot $4,000. So if they're paying me $4,025, if I want to order it from them, I'm going to pay $4,050, something like that. And different wholesale companies that they deal with local stores like me, because we deal in more volume than say most retail customers. So we have all these, a lot of these wholesalers, I've been doing business with them for 20 plus years. So they know me, and we do a lot of deals on just make a phone call and settle up later. And we're locked in, and it just takes a lot of trust. So you have to kind of, yeah, totally. So,
so you got bid, we got that. What's ask?
So it's just, my relationship to a wholesaler, their bid is like what they'll pay me. Their ask is what they would sell it to me for. So based on what they're doing for me, I adjust what I'm going to do for the public. And, there can be exceptions to it, because if I do a large deal over here with a certain product, maybe I'll do a sale and just blow it out, So if somebody wants to come in and buy, say they want to spend $100,000 on gold, and they are looking at, say, a 1 ounce gold maple leaf coin, and that's what they want to buy. Maybe somebody just came in and sold me $100,000 of gold Krugerrands, and, they're still an ounce of gold, just minted by a different country. And they weren't thinking about that, but I can give them a better deal on that one if they buy that, because that's just what happened to have come in, and I was about to send it out to a wholesaler anyway. So I can give them a good deal. So if people are flexible like that on what product they're buying, I can really help them. Now, as opposed to some people they're very specific in what they want. And a lot of times I'll have what they want, but if I don't, and I have to place an order with a wholesaler to get that product, I have to pay their markup, and then they're going to end up paying a little bit more. And some people don't care. And the difference between a wholesale and a retail price is probably like 1.5%, 1% difference. It is not much difference. So, I'm happy to place orders for people or just do, whatever. But some people buying gold, they're they want the best deal they can get, which I totally understand. But in the big scheme of things, it's like, 4,050, 4,025, whatever. I look at it and go like, it's crazy, Yeah. So at the end of the day, when people are asking me what they should get, I always just say, buy what you like. I mean, you worked your ass off for your money. You want to be able to look at this thing and go like, wow, this is cool. Yeah. Because this is more than just a coin. This is like your time and your blood, sweat, and tears that went into this. You want to look at it and go like, yeah.
So tell us the $2,000 rule, right? Because there's a taxation in buying more or less than $2,000 when you're walking into a retail. Tell us how that works.
Well, that's a state of California.
Okay. So I live in the state of California, so therefore.
So California, in their infinite wisdom, decided.
Wait, they're wise?
Yeah. What do you know?
Are you saying there's an outlier law in the state of California?
Well, okay. So in California, if you spend $2,000 on your invoice on coins and bullion, there's an exemption on sales tax. So you don't have to pay any sales tax as long as you're spending $2,000 or more. But if you do under $2,000, you have to pay sales tax, which is 8.75% in Napa.
So if you're worried about your 3% premium,
yes,
you should buy 2,000 plus.
Oh yeah, it breaks. I mean, it's
plus there's a Napa sales
it's frustrating.
Tax, right?
Well, that is the Napa sales tax, but the single mom that wants to come in and buy an ounce of silver a month for their kid, I have to charge them 8.75%. But like somebody that can afford 2,000 or more, they don't have to pay it. It just seems.
Wait, I thought
crazy.
We cared about the little man here in California.
Yeah, okay. Right. It's frustrating because it's kind of crazy. I don't know if they just consider under $2,000 a collectible and then over $2,000 an investment. I don't know what their reasoning is, but it doesn't seem right.
It was some bean counter bureaucratic person somewhere.
If someone was going to buy $1,825 worth of gold from you, you would say, why don't you make it $2,000?
Of course.
Because I can actually give you more gold. Because if they bought that exact amount, they would still end up paying $2,000.
Well, they could literally buy that extra gold and then sell some back to me right now. And my margin's like 3%, and way less than theirs.
We probably should edit that because that. So okay. I think that's a really important point if you're a buyer in California. Let's go back to we've got the American Eagles, we got the Canadian Maples, we got the Australian Cougarans. Why would I buy an ounce of gold, though, versus like a gram of gold? And what's the difference in the premiums between those?
Well, it's a moving target. Now, as a general rule, the larger pieces have a smaller premium. As a general rule.
Why is that?
Because the manufacturing cost. I mean, if you're there's 31.1 grams in a troy ounce. So let's just say if you had to make 31 pieces of gold and put it in a little assay card and all that, it's more expensive to do that than it is to make one coin.
Mm-hmm.
So stamp out one coin. So as from the very beginning, the manufacturers of these products, their cost is more to make the smaller pieces. So then, of course, that's trickled down 2 or 3 different people before it gets to the public. So now, that being said, there are times when somebody might sell me a large group of smaller pieces of gold that I got, I was able to buy them for the gold price or very close to the gold price. And you don't have to pay those premiums on like a new product would be. Like a 1 gram bar, a lot of these premiums are like $20 on 1 gram. So that's $600 an ounce more, if you buy it new. But if you buy it secondhand and, if I happen to have them, I might be able to give it to you for way less than that.
Yeah. So why would I want a gram versus an ounce if I'm a buyer? Like, what would be the motivation for that?
Well, a lot of people, they just want fractional pieces because if they think that, let's just say worst case scenario, the dollar does keep going down and people don't want it, then they could barter smaller pieces or they could sell smaller pieces at a time. Who knows if gold goes way higher, it goes to 20,000 an ounce or something. I mean, maybe you don't want to sell $20,000 worth of gold. Mm-hmm. You only want to sell a couple $100 worth of gold.
So. And so that's my issue with going back to like why you don't buy gold online and store it in a warehouse in Texas. Why? Because it's not your gold either, right? Yeah. Like at the end of the day, if the government started to decide to go, we're going to take all the gold back, they could
which they have done.
They have done. They go in there, they take your gold. And that's the other thing with owning like large bullion size things of gold. I get everyone has preferences, but like if we really hit the Armageddon that people worry about or the de-dollarized world, you're not going to walk around and be like, here's my bar. Can I have a piece of bread? You're going to be like, here's my Mercury dime. Can I have a piece of bread? So if you're collecting for Armageddon, then you need to stay small denominations. It just doesn't make any logical sense. If you're collecting to store and to build wealth and to preserve wealth, then you use bigger sizes because it's a lot easier to handle than a bunch of small coins that, are difficult to deal with.
Jason, we've talked about it a couple times. Can you get me the silver chart there, Daren? Let's talk about silver because you are Napa Gold and Silver. So is the silver trade any different than any of this, or is it just kind of like gold's second place cousin?
I mean, like what you talked about for barter or things like that, silver is definitely way better. You can go, well, silver, let's just call silver $50 an ounce right now, which in my world is crazy high, but maybe going forward, that's not high anymore. But a 1 ounce piece of silver, a 1 ounce silver round has a low premium. You're not going to pay much more than silver price for a 1 ounce round. As opposed to gold, if you buy a $50 piece of gold, you're probably going to pay,
where's my
it's tiny. It's tiny. Exactly.
Yeah.
That's just better for barter or for, smaller amounts to be sold.
So when we buy gold and silver, like there's the Mercury dime, like, so the idea of with a Mercury dime is that It's widely recognizable. I can hand that to you. You know exactly what that is. I know what that is. Anyone who understands what a constitutional or junk silver is knows what it is. So it becomes a medium of exchange because we have trust in this piece of metal. Why do we like dollars right now? Because we have trust that it's worth something. But as soon as that trust is eroded, like we're seeing right now, then people start to look at different types of fiat, right? Or they go back to gold, they go back to silver, they go back to Bitcoin, whatever the choice is. The beauty of holding like an American coin is that it's more widely recognizable, right? Versus that Australian Cougaran, which is like, I think that's gold, right? But I'm more likely to get duped.
Well, that's the problem, right? I mean, you kind of have to know what you're doing. For me, it matters that it's real. I mean, the chances that we're going to go back to barter.
So say this loud, Jason, because we hear this from clients all the time. The chances we go back to barter are pretty slim, right?
I personally don't think it's highly unlikely. You may do a transaction here or there and trade somebody for gold. I remember in 2011 when the price spiked, there were people, that was Craigslist was a big thing back then. I was always on Craigslist, right?
Yeah.
And I remember people selling their house saying like, I'll sell you my house for gold. I remember seeing all that. And I have a friend of mine that owned a store at that time. It was probably 2009-ish. He actually bought a house with gold in 2009. So,
wow.
Yes. And so, yeah, there are people that might do something like that, but 99% of us are probably never going to do that. And
why though? Like, why would the government give this up? Or why wouldn't they give this up?
Well, they probably are not going to give it up. It's just as it loses more and more value, you may not want to hold it.
Yeah.
So that's the thing too. It's like, you may want to hold, have some walking around money in gold and silver, but you want to buy something today, you go sell a little bit.
Yeah.
The spreads are very low. So, you don't lose a lot by doing it that way. And the price goes up more than the spread would have been anyway. So, and having silver, you can do smaller amounts.
So this is nickel. These are all junk, basically. Or you said that's got 10% silver in it, right?
Mm-hmm.
So what I'm demonstrating here is like, in order to go back to barter, we all have to then understand all these new rules to the game.
Most people are just not going to know, and they don't really know even when they hold something if it's even real.
Yeah.
Because I literally see fakes at least a couple times a week. People have fake coins.
People that don't know it's fake, or people trying to pull one over and you don't know. You don't judge.
I mean, no, I don't know. Yeah. It happens a lot. There's a lot more fakes out there than you'd think, and people have been duped. But yeah, I've never seen a fake that was that good that I was like, wow. Usually I know pretty right away that it's probably not good.
Yeah. So I think that's an interesting, like, as we go through this, perhaps a fiat transition, perhaps not. I don't know. Are we going to print 70 trillion or are we going to stop at 40 trillion? Who knows? But as we go through this fiat transition, the question comes, what's next, right? And I've, in analyzing it, looked at this and said, it makes sense to have some understanding and utility in gold and silver, whether you're a gold bug or silver bug, like having knowledge of it so you know how to deal with it, having knowledge of different crypto, having knowledge of how the dollar works. All those things give you, we had a client yesterday ask me, he said, well, how much work do you guys help us in the Black Swan event? Like, how do you know we're going to make it through the Black Swan event? I'm like, I don't know. Any of us are, but you're more likely to. A Black Swan event is that thing that comes out of nowhere and hits us, and all of a sudden the dollar's worth nothing, and we're in this Armageddon event, and we're trading Mercury dimes for bread, and like that would be a Black Swan moment, like the Armageddon moment, to survive. And a lot of clients will go to the worst case scenario. They'll go right there to like, oh, I got to have gold and silver because the world's ending. I got to have it. And that's probably not going to happen. What's more likely to happen is this fiat transition where something will come online. It will slowly transition. Why? And this is what I ask all our clients to absolutely think about. Do the rich want to stay rich? And if you can wake up in the morning and say the rich want to stay rich, gold's going to stay worth something, stocks are going to stay worth something, and the dollar is going to hang on as long as it possibly can because we'll just keep getting bigger guns to make sure it does.
Well, Daren, how do we've obviously spent a whole double episode talking about this. Gold ETF is a part of some portfolios. It is something that we advise on. So through all this conversation, whether it's physical or whether it's an ETF or whether it's even gold mining stocks or something like that, how do we as a firm in general, every case is unique, but in general, how do you see it? How do we see it as a firm?
We go back over and over, diversify, diversify, diversify. Go see people like Jason, talk to them, have some of that. Physicality, gold, physical silver.
Especially if it makes you feel a certain way, right?
Yeah, if it's worth
compelled.
it. Yeah, like I think it can be a great thing for people. But we also think that you should own some of everything, right? Like we believe in diversification, broad exposure to all these different asset classes. Because at the end of the day, we spend our life studying these things and we don't know. Nobody knows. And anyone who says they know, they're lying.
What about among just anecdotally, because this is, I think it's, in my experience, I haven't seen a lot of advisors talking about this issue. So among financial advisors, there is some people still have their nose up about crypto. Is there something similar about gold?
Yeah, I
say
think
that a lot of advisors are wise to it, or no?
No, I think so. So in the broker world, like we're not big fans of brokers around here, right? So we're RIAs, independent investment advisors for our clients, and we only act in their best interest. The brokers are selling product. The broker world actually has a rule called selling away. So if a client came to a broker and said, "Go see Jason about buying gold," he could be basically kicked out of the industry for doing that. That's called selling away. He can't actually say, go buy Bitcoin, go buy physical gold. That's selling away. That is not allowed in the broker world. So they've created a rule to stop advisors from advising people to hold physical gold, and silver, which to me is asinine. And why anyone would ever work with a broker given that knowledge base that they are like constricted on what they can advise you to do is crazy to me. But nonetheless, lots of people do. So, in our world, in an independent advisor space where we act only in the best interest of the client, yeah, you should own some silver. You should own some gold, some physical stuff that if that one-off possible Armageddon event happens or that black swan hits us like a Mack truck, you got something to use, right? But if you're really into it and you want to buy lots and more, then I think there's a lot of value in that, right? And clearly, it's done pretty well.
I was going to say, could you imagine your advisor saying, no, don't take any part of this or the other huge, massive candlestick for gold? I don't know. You don't want any of that. You want some of this mutual fund on my company shelf.
You say that in jest, Dan, but the truth of the matter is they do it every single day.
I know.
Every single day.
I'm not saying it in jest. Yeah. I mean, I'm saying it with a bit of a smirk, but I mean, that's really literally what they're saying.
Yeah. Exactly.
Which is interesting. So you're talking about a fiduciary duty, of course, as an RIA. Jason, I love this. I grabbed this from your website, so I'm going to quote you. Okay, you ready? This is on Jason's website, which is napagoldensilver.com. Quote, I believe finding a good coin, gold, and silver dealer is a lot like finding a good mechanic. If you find one that is fair with you and treats you right, you stick with them forever. That's exactly what I intend to do for my customers. Why is that important to you, and what do you feel your duty is as a gold dealer to your customer?
I mean, I grew up in Napa. I've been here almost my entire life, and most of my business is like either somebody I knew or one of their neighbors or one of their friends. We're like one person away from knowing each other already anyway. So for me, this is a lot more than just making money. It's a means to be able to feed my family and support my family, but ultimately money is important, but it's not everything. And so relationships to me are more important. So it works for everybody. I think people need somebody that's going to be fair with them, obviously, but I just want to be able to stand before God one day and have him say, well done, good and faithful servant.
Wow.
So that's my goal more than the money.
Are there deals that you've passed on? Are there people who come into your office and they put something on your desk and you either could have taken a particular road or you just said, no, I'm not going to do this?
Yeah.
Every day, right?
It's not every day, but
I mean, there's
been some
reasons
Yeah,
beyond
I mean,
price.
well, when you do the same thing so much, you tend to get a good eye for things. And definitely there's been people that have come in with items that just don't seem right. And I just say, yeah, it's probably not for me, and move on to the next one. But I'm in a pretty good area though. So that stuff doesn't really happen that much. I have other friends of mine that have, in Sacramento and Stockton and other places that stuff happens like all the time. For me, I'm pretty insulated from that, but yeah. There's deals that I've turned down. Sure.
Yeah.
Should we leave it there?
I think we should.
Yeah.
That's a lot. Looking at the meteoric rise of gold today, on both from an ounce, from a price standpoint, whether it's the ETF, whether it's what's coming across your desk at your shop, it's definitely been an interesting past 5 years with an asset that doesn't have a huge media machine behind it. So we wanted to take a chance today and try to demystify a little bit about what's going on in the space, talk to someone who deals with it every day, talk to someone who's got passion for it, and we hope you've really enjoyed it. Jason Bowman is his name. He's the owner of Napa Gold and Silver. NapaGoldandSilver.com is the website. It is linked up in the show notes. And thank you so much for checking out the episode today for educational purposes only. We hope that you found it educational and perhaps gave you a new perspective on something you may not have thought about recently. Wherever you're listening or wherever you're watching, make sure to subscribe. That is a great way to help the show. If you want to learn about how we help our clients, we're at SonomaWealth.com. You can take our free wealth analysis, and we'll see you next episode. Thanks.
Take care.
Thanks for watching and listening to It's All Money. We hope today's episode shared information to increase your financial confidence. Now is the time in the show for the voiceover with a bunch of words at the end. Listen close, though. You might find out something you didn't know. It's All Money is powered by Sonoma Wealth Advisors. Sonoma Wealth Advisors helps individuals and families in Northern California and across the country with building, managing, and sustaining wealth. Sonoma Wealth is a comprehensive, holistic finance solution, offering financial planning, asset management, tax planning, 401k solutions, and appropriate insurance. Take our free wealth analysis now at SonomaWealth.com. If you haven't already, like and subscribe to It's All Money on YouTube, Spotify, and Apple Podcasts. It's All Money features human hosts, musicians, editors, video crew, and voiceover talent. Video production by Fours Media in Rohnert Park, California. Online at FoursMedia.com. Music by Neon Beach, Sparkle Rising on Soundstripe. Voiceover by me, Dano. Thank you for listening to the very end. We appreciate diligent viewers and listeners. Fermata Advisors, LLC is registered as an investment advisor with the SEC and only transacts business in states where it is properly registered or is excluded or exempted from registration requirements. This content was produced by Fermata Advisors, LLC, DBA Sonoma Wealth Advisors, DBA Fermata 401k, DBA Fermata Tax. The opinions expressed by Fermata Advisors, LLC on this show are their own. Information presented on this program is believed to be factual and up to date, but we do not guarantee its accuracy, and it should not be regarded as a complete analysis of the subjects discussed. Discussions and answers to questions do not involve the rendering of personalized investment advice, but are limited to the dissemination of general information. A professional advisor should be consulted before implementing any of the options presented. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for any individual. viewers and listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance.